Good morning, the Critical Point Podcast. This is Rich Posson. It's March 24th. The market is going to open up in about 15 minutes here in the U.S. We're looking at a chart of the S&P 500 mini futures. This is a 3-hour chart this morning. I want to point out that yesterday we said it should rally into today, and it wasn't looking good going into late session yesterday, and yet it held support. It held what we believe to be an L4 bottom, and it did trend higher overnight. Now, it is overbought with this indicator. Now, it's extremely overbought, so that could be a sign it's just going to dip, blip back up, and the market just keeps moving higher. But at the same time, we have to respect the fact that it is overbought. So there will be a sell signal someday, some hour. Okay, inside the patterns, what we have are the level 4 intraweek swings. And what we can see is there was seller interest into the L4 bottom, now buyer interest, and we're due for an L4 top. Now inside of that, it breaks down into L5 trends, and we believe there was an L5 top at 9 p.m. last night, Central Time. Problem is we can extend it to now. So, and what we've learned is it really doesn't matter. The point is the L4 top can top now. Now, if for some reason the L5 is going to extend, and therefore extend the L4, we can make a case that it tops anytime today into the overnight market, but it shouldn't take as long as tomorrow's day session. So we're going to stay with the forecast that it was due to pop now, but we probably got a top coming any minute through today into, say, first half overnight, and it's going to be down by tomorrow into the next L4 bottom. Now, since we believe the larger L3 trend is down, which I'll show you in a moment, we're assuming the resistance is going to be somewhere beginning around 2,500 on up into the 2,600s. We think support, you can watch maybe the low at around 2,270. This is the June futures. If it takes that out, it could be increasing odds that the level 4 top has occurred. Now, news-wise, what we're seeing is the Markit Flash PMI came out for March for the Eurozone area, and I believe it was like record low or some tremendous plunge. And so that's kind of hinting that, yeah, we're probably going to see a crash in the U.S. PMI, which I believe is coming out here in a matter of minutes, about 45 minutes. But I wanted to point out that is just the flash PMI and doesn't necessarily have to match for the monthly. But I think it's probably going to crash, and now we just have to see what is the reaction by the market. Is it possible they're going to start immediately selling this morning, the overbought condition's going to work, and it's down in tomorrow, or are they going to play around with that number here as they look at other things, because we also have the U.S. government policy and a bill that they're voting on and whatnot. All right, let's quickly take a look at the larger trend. So this is the daily chart. So those L4 swings we just talked about are bounces every few days. And what the model is doing is trying to keep track of those to calculate the tally, if you will, waves of buying and selling, to come up with an idea of, is the larger trend completed? So the model made a correct forecast, buyer interest, but it might only last a few days, and then it forecast several more days of selling, and that's occurred. Now, we may be pushing it too much. We're still using Friday the 13th as an L3 bottom. We have revised to showing March 20th as an L3 top, and it didn't work well at all, and it's just because it's such a weak, larger trend, a crushed market. But the thing is that we think tomorrow is the first day for an L3 bottom. Now, if we are incorrect using March 13th, we probably should use any of these other lows, and the end result is that just shoves the L3 bottom out into next week. So this could remain bearish for a while yet. But the point is, maybe, just maybe, it can bottom as soon as tomorrow on into early next week. So we're looking for this L3 bottom, and this would be the first opportunity to trigger something most important, but it's only the first. What should occur is a little bit of a rally here where we might finally get 5 to 7 days of buyer interest into the next L3 top. Upside potential is limited to, say, a trend line around the 2,400 mark. You can use the high back here at around 2,500. We have lines going almost up to 2,600. And I wouldn't rule out, especially if the more important low is coming in, the first leg higher of these more important trends could put us all the way up into the 2,800s, I suppose. But let's take it one step at a time. I think forecasting actual price levels is going to be far more difficult than just forecasting the overall trend and looking for patterns of a top and bottom. The market's quite oversold with this stochastic. It seems reluctant to try to make new lows here, but the market's making new lows. I think it's telling us the market's getting a little tired of going down, but the trend is down for not only this level 3 trend, but it's also down for the intra-year and long-term trends. But as I say, I think we want to start probing for a bottom here soon. Now let's see what this PMI Flash news gives us and how the market reacts, as well as what's going on in the political side and the latest virus news. As always, manage your risk relative to others. If you're thinking of trying to play this L3 trend, you're going to have to use some kind of daily low here for a risk point to just kind of guard from new lows. Otherwise, the market's up at the moment. The best forecast is saying probably back down tomorrow. We probably got a few days yet here before we can have a worthy bottom. Thank you.